Kawaljeet Saluja is with us. He's Executive Director and Head of Research with Kotak Institutional Equities. Kawaljeet, good morning. It's a pleasure to have you back on the channel. Prashant this side. What is your overall sense on what Infy has done, what it's said about financial year 17? Where does the stock go from here?
Well, I think they guided a little bit ahead of our expectation. We had expected them to guide for 11 to 13% revenue growth for FY 2017, and they guided 11.5 to 13.5. But what was also equally comforting was the fourth quarter margin performance, in which the EBIT at 25.5% exceeded our estimate by around 90 basis points. And the management commentary on FY 2017 margins were also fairly comforting. So all in all, I mean, it was a fairly comforting guidance as well as both on revenues and margins. What we have done is essentially taken up our target price on the rollover to FY18 financials. Our target price has gone up from 1,300 to 1,425 rupees.
Where is it trading now in terms of PE ratios? And just talk about the age-old comparison between Infy and TCS. Where does that stand now?
For Infosys, it is trading at now 18 times FY 2017 estimates. And for TCS, it's basically just shy of 18 times. So broadly the PE multiples are similar. Maybe Infosys is trading at maybe 1% or 2 premium now.
Some have argued that, well, that premium should continue to expand. In constant currency terms, even the last quarter, the quarter before that, growth rates for Infy were higher as compared to TCS. You think that is possible? We enter, so there was a huge underperformance in Infy vis-a-vis others between 2011 to 2015. As it starts to correct, how much more can it extend?
I think what matters from a PE perspective is, of course, the growth, which is something which is visible for Infosys over the last 4 quarters, and the confidence on sustainability of it. And broadly, what we believe is that whatever Infosys has done over the last 12 to 18 months in terms of improvement in sales process, a renewed go-to-market positioning, a significant emphasis on AI automation, and significant flexibility on pricing, all these factors combined should lead to a growth rate which is above industry and possibly industry leading as well. So to that extent, TCS, Infosys will trade at a premium to TCS.
Just a quick point, the Vision 2020 which was put out, right, which is $20 billion in revenue, 80,000 per worker productivity, $80,000, 30% margin. As an analyst, how much importance do you pay to that?
Well, 2020 vision just outlines the ambition of the management. So to that extent, it's relevant. But really, what matters is, how well the company delivers the numbers over the next 12 and 24 months.
Right. Do you expect Infy to conduct some large acquisitions along the way?
So as the company has always stated that, they'll always focus, the acquisition has to be focused on new tech areas. So to that extent, acquisitions may not be large from a revenue standpoint, but of course, acquisitions in new tech areas are fairly expensive. So maybe in terms of dollar values, those may be large.
Kawaljeet, how much of the confidence which the market is now has gotten Infy once again now is based on the leadership at Infy now, and the free hand that Mr. Sikka has got and what he's doing in the company. Obviously, he's a lot more futuristic than the past management has been, especially in disruptive technologies, etc. Is that a key element here for you as an analyst for the industry?
Well, I think, Mr. Sikka had free hand for the last 18 months and he has delivered exceptionally well. the analyst community, the investors, the stakeholders in general are very happy with the level of performance of Infosys. And to that extent, the markets are rewarding that performance in the form of now PE multiple also, which is industry leading.
Okay, before I ask you for your thoughts on TCS and what they could do in the quarter, just your thoughts on this huge fine, right? I mean, it looks severe, $940 million, which came through. The news came through over the weekend. We got a response from TCS as well. How should one look at this?
I think as far as the fine is concerned, TCS did put out in the press release that the fine will be reduced once the a judge gives out his final view in the next 6 to 8 weeks. So the fine itself will go down. However, more than the fine, what these things normally do is they act as a distraction, and at times can consume management bandwidth. Even though TCS has a good management, bandwidth and depth, but they still act as distractions. So to that extent, whatever came out is negative for TCS.
It is also kind of bad timing, publicity, right? Coming as it does in the middle of the US presidential campaign. I mean, it also gives, in a way, brownie points to legislators targeting Indian IT. Would you agree with that?
I mean, true.
But in terms of actual visible impact in pushing that debate along, does it do anything or no? Because, I mean, it's a very visible company. The fine is huge.
I mean, there will be noise levels, so we'll have to, see what the level of impact would be. But yeah, there will be, the noise levels will be high on this.
Right. But you're saying that, by the end of it, if this goes to trial, etc., as is expected, the actual fine would be a lot lower. Should be a lot lower, you're saying?
No, so right. So I think that the jury has given its verdict on the fine. The judge will give his final view and on what the level of fine would be. And TCS had put out in its press release that they expect the eventual fine when the judge, awards damages to Epic, that award will be lower than the number put out by the jury.
Yeah. I mean, in terms of financials, will TCS have to create a provision for servicing the fine in its P&L? Maybe not in the fourth quarter, but Q1, Q2, etc.?
No, I don't think so. I mean, this can be shown as contingent liabilities.
Okay. All right. They also have to provide a bank guarantee for the same, Kawaljeet, right?
I presume so, yeah.
Okay. Fair enough. Let's get to the numbers now. What are your thoughts in terms of what TCS will do, and I guess more importantly, what it says about the coming year?
We expect the company to, deliver a constant currency revenue growth rate of 1.5% to 2%, and margins that will inch up to 27% EBIT. I think broadly in terms of commentary, what we expect is the management to sound confident on FY 2017. Now that the drag elements on their growth rate in FY 2016 it is behind them. I mean, those drag elements essentially were Diligenta revenues from the non-core markets as such. And I think the drag elements of this portfolio has reduced. So to that extent, I expect the management to sound confident on FY 2017.
Okay, all right. The IT results will continue to come through. You have Mindtree, which will report today. You bullish on Mindtree, right? You mean one of your top picks, Kawaljeet?
I'm bullish on Mindtree from a business standpoint, not so much from a valuation standpoint.
Okay, so you're saying it's mostly fully pricing in the prospects?
That's right.
Okay. Wipro will report day after, Kawaljeet. What are your thoughts on Wipro? I mean, that company has also been for the past more than a couple of years been talked about as being at the verge of a breakout, starting to do well, etc. It's not happened. Now, though, it's got a few similarities with Infy.
That's right.
It's got a US-based CEO. Several of the top tier 2 management positions are filled in by, newer people, new team. I don't know if the similarity ends there, but what are your thoughts? Could Wipro start to do very well?
Well, I think the initiatives taken by the new CEO are encouraging. The company has made a fairly interesting list of acquisitions as well. It's just that with Wipro, right, inevitably there have been some slippage in one aspect of the business or the other. The entire hunting and mining is one aspect. Of course, this company has been a little bit unfortunate with its portfolio as well, especially the energy and utilities vertical, which has been a drag on growth. But really, for the stock to do well, everything needs to fall in place, which is hunting, mining, whatever they are doing on digital. So, we still don't have enough confidence whether, all of the changes which the CEO has made will fall into place in the next, over the next 12 months. And so to that extent, we are recommending reduce on the stock.
Uh-huh. The other two large cap names, HCL Tech and Tech Mahindra, what are your thoughts?
HCL Tech, they continue to do well in IMS. The challenge is that IMS has become fairly competitive, and in applications business, the company is rather weak. So despite relatively inexpensive valuations, we are still cautious on that name. Tech Mahindra, the challenges are very well known in the telecom vertical. They have underperformed significantly in growth in FY 2016 and could underperform in FY 2017 as well. However, a couple of things about Tech Mahindra excite us. One is the fairly large deal pipeline, and we believe that that deal pipeline will translate into wins for Tech Mahindra, and so to that extent, the revenue growth prospects should start looking up. Second is that we like the fact that in case of Tech Mahindra, the margins have got significant headroom for improvement, and combine that with inexpensive valuations, makes the stock fairly exciting. So Tech Mahindra is a buy-rated stock.
In the coverage universe, Kawaljeet, what else it really excites you? I mean, in terms of absolute upsides that can be had.
Infosys and Tech Mahindra.
Okay. I mean, we're talking about everything you cover, right? Mid caps, etc. Everything.
That's right.
Okay. Just one last quick question on this entire, something that I mentioned earlier. This entire, it happens, I guess, election time. It happens here in a separate context to other industries. It's happening in the US, right? Indian IT taking away jobs there. What are your thoughts? Should one pay attention to what's coming out of there? Because it's constant, something or the other, and I think it'll continue. Or you think it's just noise, ignore it?
No, I think one has to keep an eye on what's happening in US. The cost of doing business has already gone up, which reflects in the way the visa costs have increased consistently over the last few years for Indian IT. So we'll have to basically keep an eye on whether there are any incremental adverse visa restrictions that come in. Having said that, Indian IT companies over the last 3 years, anyway have stepped up local hiring, and over a period of time, they would ideally want to have a nice balance between employees on visas versus local. I think they are driving their hiring towards such a program. Now, that is something which is encouraging, but nonetheless, this is election year, and we'll have to basically watch out for whether there are any adverse signals that come up, so far as it pertains to visa.
In the coverage universe, Kawaljeet, what else is it really excites you? I mean, in terms of absolute upsides that can be had.
No, I think one has to keep an eye on whether there are any incremental adverse signals that come in. Having said that, Indian IT companies over the last 3 years, anyway have stepped up local hiring, and over a period of time, they would ideally want to have a nice balance between employees on visas versus local. I think they are driving their hiring towards such a program. Now, that is something which is encouraging, but nonetheless, this is election year, and we'll have to basically watch out for whether there are any adverse signals that come up, so far as it pertains to visa.
did you pay attention to comments by Mr. Narayan Murthy recently, Kawaljeet? He basically said that he wanted 95% of Infosys' work to be handled out of India, 5% at client locations by local workers.
I don't have a view on that.
Okay, I mean, this was a speech that he made, I think this was last week, or the week before that. It got picked up by American press, etc. as well. Kawaljeet, thank you very much. Great speaking with you. Appreciate your time here as always. Thanks indeed.
Great, thanks.